All right, Patrick, this is actually a good time for this conversation, which is for investors, they're going to have to pick their poison. And this is an interesting way to think about it. And what do we mean by pick your poison? So I'll kind of create the context and then you can give me your thoughts on it, Patrick. But it's really time for investors to say, listen, do I get into the market now when prices are a little lower, but I got to pay a little more for interest rates? So do I get in now, or do I kick the can down the road, wait 12, 18, 24, 36 months? And I can tell you my version of this, which is in that amount of time, your price is going to be higher. Your interest rate might be lower, but your price of the property that you're going to purchase is going to be higher. So do you buy now and wait for interest rates to come down and handle the short term, or do you wait and take a chance on the future? What are your thoughts on this, Patrick?
Well, I think that's a perfect, analogy of pick your poison, because here's what we know. The Bank of Canada raised rates to slow the economy. The economy is in fact going to slow, and will it be a soft landing or a harder landing? That's yet to be determined. Depends what they do in July. Depends what they do in the future. I don't think the Bank of Canada knows what the hell they're doing. The government certainly doesn't. Damn! But let's put it this way. When we look at what they are potentially going to do in terms of slowing the economy down, it's going to mean that when they get it down and they're going to overcorrect, because they always frickin' do, they're going to have to do what? They're going to have to react quickly and bring rates down. And keep in mind, rates don't have to come back to 0.50 or 0.1% or 1%. Rates just have to come down a quarter or a half. And guess what? Everybody's going back in, because they're going to chase that market. They're going to chase that interest rate because interest rates are coming down. If you're an investor, you're then going to be behind the wave. You're going to be chasing the wave, trying to get out in front of it, because again, supply will be an issue. Demand continues to be, although that's an argument. I get it. We'll talk about that shortly. But ultimately, pick your poison. You come in when the rates are a little bit high, prices are a little bit soft, and they're going to probably soften a little bit or at least flatten. There's going to be deals to be had. To your point, put up with and make sure you're looking for good, at least break even cash flow deals, and buy them now, wait for the rates to come down as opposed to chasing it. I think investors are going to have to make a decision. So are homeowners, by the way.
Well, I tell you what, Patrick, I think my version of this is I think that if you're an investor and if you're thinking about your future, your financial future, you're absolutely crazy to wait and say, let's maybe do this in the future in the hopes that interest rates might come down. And I'll tell you why I think that's crazy. And it's for two particular reasons. Number one, you don't know what's going to happen in the future. You don't know if interest rates are going to come down. Yeah, you think so, Patrick, and a lot of people think so. And there's a lot of people that believe it's going to come down, but nobody knows. Nobody thought they would also go up this fast. Nobody thought they would be raised this much. There's all these various things. So to look into the future and to leave your financial future at the whim of someone else that you're hoping might lower interest rates is number one, crazy in my books. But number two, and more importantly, is you just have to change your tactic to suit the times. The reason people say they don't want to invest in real estate right now and they're waiting for interest rates to come down is because they think that whatever property type they have in mind, that's going to cash flow. Like, oh, if interest rates come down by 2%, my the condo I want to buy will actually cash flow. That's ridiculous, by the way. Just go find a better property that will cash flow. Do a conversion, get a duplex, get a triplex, buy a fourplex, buy something that will cash flow in today's market rates. And when interest rates do come down, two things happen. One, your property value will go up. And number two, your cash flow will go up and you'll be in a much better place.
Well, and I think it's something we have to shine a light on. We're not suggesting for a minute that everybody go buy. We're actually really want to shine a light on, number one, there is opportunities because there's motivated vendors out there, and go look for those deals. Don't sit around waiting for deals to fall in your lap. You can actually go looking for deals, and it's not a case of just buy anything that shows up right now. The point is, keep moving forward one step at a time. Look for those deals. Don't ignore what's happening in the market, and stay connected.
Totally agree. My aim is pretty good today.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.